Hi, this is Kerry Artek with Wicked Stocks, bringing you your daily Tesla report for Tuesday, March 21st, 2023. Before we walk through the charts, just want to encourage you to please click like every time you watch the daily Tesla report. It helps us out a great deal in being found. And subscribe to the Wicked Stocks YouTube channel. You'll be notified each and every time new content has been uploaded. Check out wickedstocks.com as well, where there's a full assortment of daily videos like this one that is part of a subscription package that includes the daily Triple Q, the daily SPY report, 2 individual stock picks every week. On Tuesday, today, we're putting out a 5 to 10 minute video on Etsy. For example, the S&P 500 index, the NASDAQ 100 index on a weekly basis, the long bond TLT, so forth and so on. We offer a 5-day money-back guarantee. So if you're not happy, you just shoot us an email and we will gladly send your money back. But most people stick around when they subscribe because they see so much good analytical work and directional indicators on the primary indexes, the ETFs, the Triple Q and the SPY. So here we are. This is the big picture. We came off of meaningful support in early January that is presently 68.85 to 80.56. On the way up, we had a buy signal about 2 months ago above this band of channel support now at 146.09 to 154.20 on the weekly chart, and above which, still anticipating 238.16 or this descending channel top over the coming, it's been a 2 to 3 month objective. We're a solid 2 months into it. I don't know if we can expect this by the end of April or not. We will see. In the interim, in the midst of that buy signal above the 146.09 to 154.20 area, the market did take a bit of a break when it settled several weeks ago below this channel bottom that is presently at 205.86, then indicating a rising 2/3 speed line, a trend-defining speed line projected off that January low that today is at 173.46. We tested this level, was it last week, Monday of last week, and came off of it nicely. And it's not so much 205.86 that I am anticipating over the coming weeks, but 221.25, a retest essentially of that long-term Fibonacci level that goes back to way up here on the left, the November 21 all-time high. So if, getting back to this chart, I were to dissect sort of the 3 to 5 day dynamic, it really looks more like this. We still have 173.46, meaningful support, and we have a descending 2/3 speed line coming down at 192.97. We might see that level today if we happen to push or open above this very short-term channel top that managed to snag Monday's high. It is based in part on Monday's low, 186.42. Pushing through 186.42, 192.97 is likely today. 186.42 is a pivot point for the day, below which we could fall back to 173.46, above which 192.97. And this pretty much shows you the day trade dynamic. I'm not calling it bearish below 186.42, but I do think that there's room for this market to potentially ease back to 173.46 on an intraday basis, where you can buy the market not only for the day traders, not only for the 3 to 5 day time horizon, that is the swing traders back to 192.97, but also for the 2 to 3 week position traders up to 221.25. And yeah, over the next 3 to 5 weeks, perhaps by the end of April, we just might reach this longer term objective at 238.16. Hi, if you enjoy watching our daily Tesla report, you'll love our daily Triple Q and SPY reports. They're presented in the same 5 to 10 minute video format. Our daily SPY and Triple Q analysis provides directional market signals that are correlated with highly specific price support and resistance levels. Whether your trading time horizon is short or longer term, we promise you a distinctive edge in your trading of the SPY and Triple Q. We offer a 5-day, no questions asked, money-back guarantee. So go to wickedstocks.com right now and start receiving your daily SPY and daily Triple Q reports today. So that is sort of the big picture right now. And I say all that not because necessarily a rising 2/3 speed line is a significant long-term support level, but because when you combine that and put it in the proper context of having cleared above this area about 2 months ago in the 146.78 to 155.18 area, then you can sort of assume that it is a stronger point. So that covers the upside. If, though, we do, let's talk about breaking 173.46. 163.91, which is the pullback low from about a week ago, in reach today. And if we close below 173.46, 155.18, likely over the next, it could be as little as 3 to 5 days. And that is this band of channel support all the way down to 146.78. 146.78, by the way, lines up nicely with a downside 5/8 Fibonacci at 146.06. So I don't show any of it here, but I just wanted to show that coming off the January low against the February high, a 5/8 classic downside Fibonacci is at 146.06, and that lines up really well with 146.78. So we'll be following this. This is our base of longer term support, able to contain selling through the rest of the second quarter. And we should come off of it nicely within a month or two, 221.25. And once again, within 2 to 3 months of testing that 146.78 area, if we were to test it, the 238.16 channel top in reach. Trying to think if there's anything else that needs to be fleshed out. And it really is this image here, 186.42, decent intraday pivot point. If you're an aggressive day trader, I would suggest not being short above 186.42 until we reach 192.97. And then you can play the short side, not only for the day, but even into later week as we can come off of it within several days, 3 to 5 days, and then retest the 173.46 speed line. If you did not get long the market longer term, which is to say, over the next, say, 2 to 3 weeks, expecting 221.25, and over the next couple of months, that 238 long-term channel top. If you did not do it when we tested this speed line last week, you may consider that then if we close above 192.97 today. And then I think we're 1 to 2 weeks away from reaching 221.25. And yes, if we close today above 192.97, I do think that by the end of April or sooner, we should reach this longer term objective at 238.16. So, 238.16, I'm going to call that a 238 out of the money call. And if we close today above 192.97, you may reach for that 238 out of the money call, or a 235 that doesn't expire. I'd go a couple of months out on that. That would be a decent play to the upside. You could also look at 221 out of the money calls that don't expire for at least 2 or 3 weeks. Inversely, if we close today below 173.46, you may reach for 145 or 150 out of the money puts that don't expire for at least a couple of weeks. This would be a zone of support that can contain selling, as I say, through the rest of the second quarter. I think I'm just going to leave you with this image here. This is the two-sided framework for the next 3 to 5 days. But keep in mind, we are constructive well into April above 173.46. That's all I've got for this particular daily Tesla report. Please click like, subscribe, and check out wickedstocks.com. Have a nice evening.